The Nigerian Stock Exchange engaged dealing members, analysts, and capital market correspondents on its 2019 recap and 2020 outlook. Anchored by the CEO, Mr. Oscar Onyema, it was an opportunity to present key highlights of market performance in the year 2019.
Primarily driven by regional economic performance. In developed countries like the US, capital markets were up, with leading indices like the Dow Jones Industrial Average breaking record highs. This was bolstered by favorable US economic policy, such as tax cuts, robust economic growth, and lowered interest rates. Similarly, the Nikkei 500 was up by 21% on the back of a strengthened yen and growing corporate earnings. In Africa, it was a tale of mixed performance across benchmark countries, with some parts of the continent posting positive returns, while some ended the year in negative territory. If we look at how we stack up with our benchmark exchanges within Africa, the NSE All-Share Index underperformed. It also underperformed as compared with the MSCI Frontier Market Index and the MSCI Emerging Market Index. The Nigerian capital market mirrored the performance of the larger economy, which continued its moderate path of recovery, growing by 2.28% as recorded in the third quarter of 2019. The pace of the Nigerian economy remained fragile as the economy continued to grow below population growth, leading to per capita income and unemployment challenges. From an international investor's perspective, the Nigerian bourse had to compete with developed and emerging capital markets, which saw risk-based assets priced and valued more competitively. Capital-conducive U.S. federal policy enabled foreign investors to economically enhance leverage and seek investment opportunities in their home and adjacent countries, as Africa's largest economy adjusted to new economic realities. On the domestic front, investors contended with 1, the macroeconomic landscape, 2, fiscal and monetary policy direction, and 3, a wait-and-see attitude given trends in foreign portfolio investments. Despite welcomed stability in the FX market due to the CBN's intervention, concerns around the stability of the Naira remained prevalent. In regards to corporate performance, corporate earnings were moderate as at the first half of 2019. These aforementioned factors impacted the equity markets negatively during the year. However, our fixed income market performed exceptionally well in 2019, reflecting a flight to safety. Despite challenges faced, we continue to execute on the NSE's 2018 to 2021 corporate strategy geared towards 1, enhancing the customer experience across the value chain, 2, reorganizing for success, and 3, capitalizing on mission-critical strategic initiatives such as our demutualization effort.
Speaking further, he listed some of the key achievements in executing the NSE strategy.
The exchange showed commitment to achieving its strategic objectives during the year under review. We focused on our key targets to continue to execute on the NSE's 2018 to 2021 corporate strategy, inclusive of restructuring the organization, onboarding new financial instruments, and developing the market, as well as focusing on customer centricity. A key aspect to our vision of becoming Africa's preferred exchange hub is to successfully demutualize the organization. Having met the necessary requirements of the Securities and Exchange Commission, the exchange has obtained a letter of no objection to enable us proceed to the final stages of the demutualization process. We have also sensitized our stakeholders on the process of demutualization and will continue engagement throughout the process. In anticipation for derivatives trading on the exchange, the NSE released a derivatives market rulebook that will serve as a guide for trading derivatives on the bourse. We launched X mobile app to boost investors' participation, investor relations data pack to enhance issuers' stakeholder engagement, mutual fund trading and distribution platform to enhance the retail customer experience, X Academy e-learning platform to make quality learning accessible and affordable to individuals, corporations, and institutions. Key listings. We listed the MTN Nigeria Communications PLC by introduction on the premium board, cross-border listing of Airtel Africa on the main board alongside London Stock Exchange, Sacor PLC by IPO on the main board, Access Bank PLC 15 billion green bond, and North-South Power Company Limited 8.5 billion corporate infrastructure green bond. We also listed the Greenwich Alpha ETF focused on tracking the NSE 30 index.
He also gave insight into the global developments that will shape the Nigerian economy in 2020.
We expect about 3 key factors to shape the Nigerian economy in 2020. Oil price and production, the global economy, political stability, and business environment. Oil price and production. Since Nigeria still remains reliant on oil production for FX reserves, the dynamics of oil price and production will continue to influence the capital markets and the larger economy. Factors such as US and Iranian tension, oil supply shocks, and progress in trade negotiations between US and China will impact on crude oil prices globally, and therefore on Nigeria as well. The global economy. The IMF World Economic Outlook predicts global growth of 3.4% in 2020. This is predicated on reduced trade and geopolitical tensions and macroeconomic strain in Euro area that have dampened business confidence and investment decisions. We note that Sub-Saharan Africa is projected to grow at 3.59%, which is a slight increase from the 2019 estimates. The road ahead. Domestically, market segments may be buoyant by a steady and stable recovery in the domestic economy alongside continued sustainability in monetary policy. The signing into law of Nigeria's Finance Bill 2019 and implementation of the 2020 budget may have a positive impact on companies' earnings as well as consumer spending. Accordingly, the exchange will continue to advocate for business-friendly economic environment, working in conjunction with both the public and private sectors. The year 2020 has started on a good note, with the NSE All-Share Index recording a 9.48% improvement year-on-year, year-to-date. We intend to work closely with our stakeholders to sustain this growth trajectory. In our aspiration to become a more agile and demutualized exchange, and pursuant to the SEC's no objection letter, which we received in December of 2019, we will proceed to next steps, which includes seeking formal approval from our members on our demutualization scheme. We are committed to continually provide clarity on the demutualization process to our various stakeholders through regular engagements. While keeping an eye on the strategic intent of the exchange post-demutualization, we will continue to leverage our vast network of stakeholders, in addition to developing new strategic partnerships with the goal of delivering better products and services to our customers. As African champions, we will maintain momentum in executing our corporate strategy in our efforts to elevate the prominence of African financial markets.
The doyen of the exchange, Alhaji Rashid Yusuf, speaks further on the event and the expectations for the market.
We had a relatively not so good year last year, but we started on a good note this year. I think the underlying problem is liquidity, and that is being rectified one way by the central bank action, because we have so many players competing for the same liquidity in the market. The banking sector is competing. The federal government was competing via the treasury bills, and the Nigerian Stock Exchange also was competing, the capital market competing, and you've seen the effect of that. So it's a question of balancing. And the challenge was on the exchanges, how do we make ourselves attractive in competing for the limited liquidity? And I think what has happened now with the action that the central bank has taken has meant that a certain quantum of that liquidity is moving towards the capital market. The challenge to me and to the market is how do we sustain that? How do we continue to make the capital market attractive? And that's part of what the CEO of the Nigerian Stock Exchange has touched upon. We have to do that by continuing to educate the investor that the capital market is a veritable market. It's a market where they can make money. We have to continue to educate also the issuer that coming to the capital market is one of the best options that is available to them, so that when we have more listing, then we have more variety of instruments that are available, and then the investor can also have more choices to take on the exchange. That way we can continue to have a very robust market, a very diversified market, and a deep market. Because if we don't deepen the market, if we are only left with few stock, then even if we have the liquidity flowing on our side, there will be no instrument to absorb that. So the more instrument we have in the market, the deeper the market is, then the more attractive it is.
Despite closing the year 2019 with a negative return of minus 14.60%, the NSE market capitalization increased by 10.55% to 12.97 trillion naira from 11.73 trillion naira in 2018. Market stakeholders expect that the activities of the exchange, coupled with the Nigerian macroeconomic environment, fiscal and monetary policy framework, will support a sustained performance that will close 2020 on a positive note.